Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Let's keep up our analysis of the gold market. So first we're starting from the daily chart as usual. So here we could see the performance of the yesterday gold market. So we can see this drop has happened back to the lows that we talked about, and by the end of the session the market is returning right back up. So we yesterday have discussed the possible breakout of this area, but we said that tricky moment is that take a look, actually 1949 and actually 1950 support area stands very close to the lows, where Sol stands slightly lower, so it's around 1935 area. So how to currently actually treat and deal with this price action that you could see? Trend remains bearish. So this flat action is mostly suggests, well, some kind of the bearish dynamic pressure that market actually starting somewhere flat with a bearish trend, and this might be the preparation for the downward continuation. On lower time frame, on the 4-day frame chart, now it's becoming more clear what to expect, just because take a look, market starts forming kind of the triangle consolidation near the previous lows. The tricky moment with the triangle consolidation, as you understand, is that it keeps the door open for the both directions. So because here as I draw a downside butterfly, but with the similar effect you could consider, for instance, upside butterfly. You could draw it right there as a possible upward action, or even right there, so the market will stop somewhere in downside action. This could be right wing, right? Besides, you could suggest a kind of the ABCD pattern here if it will be minor breakouts. So what does it mean? It means that if you would like to take the short position, initial stop, it would be better to place above the confidence area. This question of the efficiency of this trade is just because, as I said, it's 1973 right now. If you take short position, for example, with the target 1950, it's approximately $23 per contract. If you place about 2000, your risk will be around 25 or even slightly higher. It's potential loss. So as you can see, 1-to-1 risk-reward ratio, it's not very attractive. So and you will have to find some compromises. So either you tight your stops dealing directly with this triangle, but take the risk of the possible, well, slightly more extended pullback somewhere to confidence area, or you just do nothing and wait with this retracement will happen. If it will not happen, well, you will find for another chance to trade. This is the position that we have currently. Unfortunately, existence of the near standing support area, it makes difficult, or actually by the position management, it's not very ideal point for trading, but it still is possible to do. That's just the situation that we've got right now. So my personal opinion is that, well, in current environment, I suggest that's probably, since we have still some time until the final decision on the debt sale in the United States will be made, discussion is coming really difficult. So I think that some pressure still could exist here in that market actually might be pressed a bit more. And since even by the classical approach, you could see that the triangle after downside action, it's as a rule downside continuation pattern. So my point of view is that here is still chances for a downside leg still exist. But in general, overall situation still stands a bit tricky. Besides, in the recent time, you could see that more and more comments confirm our suggestion that rate probably will be increased in June. Today we'll get the Fed minutes. It also could shed some light, and if they will be hawkish, the gold also could get another hit. That could make them moving slightly lower. So overall situation, as you can see, not totally free from the fundamental background. So for taking the long position, if you suggest that this might be upward action, this will be enough probably to place stop somewhere below these lows. So we do not need to hide it too far. If it will happen right out from the triangle. and minimum target will be somewhere around 20,000 even. It's right there. So that's what we have currently on the gold. Let's see. Let's keep watching what will happen.